Oh, perfect. So, did you want to do that? Yeah. So did you, so did you want to do this instead of this? Did you want to do this instead of your block? No? Okay. So then just do a little black dot in the middle for your eyeball. There you go. Now you don't look like a dog anymore. Yeah. Yeah. No. Are you done? Sure. Oh, hey, you're also going to need to take a picture of the grammar you did last night because she said she could only see like half of it. But can you take a picture of all of them and put them on Seesaw? Or do I need to do that? Okay, that's fine. A little abstract. So here, take your clay and your garbage. There you go. I need to erase that. Here. I don't know. You got the schedule over there. You still have art, right? You have math. Did you want to do your math? Okay. Are you going to do math right now? Oh, okay. Are you gonna leave the room or are you gonna stay here? Are you staying here? Okay, so good morning. It's our second to last class. Woo! Last Tuesday that we have. So a couple of important announcements that I want to make. First of all, the chapter 13, we're obviously not getting to chapter 13. However, if you want to do the chapter 13 homework, I will give you extra credit for that. I will give you 100 points on your lowest quiz grade. So it's up to you if you want to do it, or however, whatever percentage you get done with it, I'll add those points to your quiz grade. Number two, we as a department have decided to make the final optional. So that means that if you're happy with the grade that you have before the final, you do not have to take it. If you would like to try and improve your grade, you can take the final. So it will not hurt your grade. So again, it's optional. Are there any questions? All right, so let's get started with chapter 12. Chapter 12 is not as sort of fluffy as some of the other chapters have been lately, but it does kind of tie everything that we've been doing together. So it's a good sort of ending chapter to start with or to end with. Okay. So chapter 12. Hopefully, I think you guys can all see this. Okay. All right, so we're going to talk about two different types of costing systems. These are the two most common types that we have if you're making one or more items. So today we're just going to talk about job costing. Thursday we're going to talk about process costing, but let's kind of talk about the difference between the two. So first of all, job costing. Basically, you are accumulating your cost by job. So this type of costing system is typically used for companies that make large sort of individualized things, like if you're building a house or you're making a yacht, or even a lot of accounting tax returns, stuff like that, if they're sort of big and individualized. So they give the example of making a movie or construction or an airplane. So it's big items, individualized items, and you're tracing the cost of those items by job. Process costing is when you are making a lot of the same stuff, and typically you have a couple different processes. So I think the book, maybe it's not this book, it's the last book that we had, talks about making vitamins. So you have the same vitamins that you make all the time, but there's different processes. So first you have to like mix the vitamins that go in, and then you have to put them in the capsules, and then you have to put them in the bottle. So that's all three different processes that it goes through. And in this case, you're accumulating costs by each process. So what's the cost of mixing the vitamins together? Let's say it's a $1 a package. Then you say, okay, what's the cost of putting all of that vitamin into a capsule? Well, that's $1 now. So now you're up to $2 a bottle. Well, and then what's the cost of bottling it, putting it into the bottle, and the cost of the bottle? Well, that's another $1. So now that process is $1. So now you're up to $3. So process costing is accumulating costs by each process that it goes through. And again, it has to be, you're making a lot of them, they have to be very similar. So oil refining, manufacturing of chemicals, and manufacturing of cereal. Sorry, that's my dog. It's fantastic. one more class. Okay, so in this case, it's just talking about how cost flows, and this is regardless of which process or which costing system you're using. But you receive an order, you schedule work to be done, you order the materials, and then you begin the work. That's pretty straightforward, I think. So with a job costing system, this just kind of tells how everything is accumulated. Either way, you start with like a raw material, and then you have work in process, and then you have finished goods, and then it goes to the income statement for cost of goods sold. But and this is the same regardless of which costing system you're using. The difference kind of goes in the work in process part. So here you're accumulating the cost. I guess we're making boats. You're accumulating the cost by each boat. So each boat requires X amount of material, X amount of labor, and X amount of overhead. And then the cost of goods sold, you know the cost of each boat, so you can tell the cost of goods sold by whichever boat that you happen to sell. Process costing, on the other hand, and we'll talk more about process costing on Thursday, you have the same thing. You have your raw materials, work in process, finished goods, and then income statement, cost of goods sold. However, work in process, you have, in this case, there's 3 different processes in order to make whatever it is you're making. So you're going to have 3 different work in processes. The work in process that's left in extraction, one that's in inventory mixing, and one that's in packaging. So everything else is kind of the same, except that you have 3 different work in processes here. There are some hybrid systems. We're going to skip that part. Okay, this talks about the documentation that you need for job costing. Not super concerned about that. Every company is different. What I will tell you is, I'll just give you an example. I did accounting for one of those companies that makes those big neon signs. I think I've probably talked about them before. And so what we did was, when we accumulated the cost by job, because I use job costing, when they ordered material, direct material at least, they would tell me, okay, whatever the direct, I can't even remember what they bought, but the plastics and the, I don't know, whatever's. They said, well, this is for XYZ job. And then with labor, every employee would split their time between, I spent 4 hours on this job, I spent 2 hours on this job, so I could accumulate their labor that way. And then we decided to allocate overhead based on the amount of hours that they worked, so labor hours. So for each hour that an employee worked, we allocated X amount of overhead. So we were able to allocate those 3 costs to each job that way. So this just gives you some examples of how they did it. And again, it's very dependent on each company, but you have the materials that you ordered. Why do I feel like you're only seeing the top of my head? Okay. The materials that you ordered, the labor that was incurred for each one, so 1,400 hours, 1,600 hours, and then the overhead that they allocated. And we'll look at some examples of how they do this in a few minutes. So with applied overhead, again, it's the same. However, they have decided to apply overhead. So we did it based on how many hours were worked. You can base it on how many labor dollars are worked, whatever, and we've gone over that before, whatever you deem is the most appropriate. So then now you've allocated your 3 costs. And they did it on direct labor. So for every hour that they incurred in labor, they allocated $3.90 in overhead. So for this particular job, which required 1,400 hours, they allocated $5,460 in overhead. Okay. So, sorry. Okay. So let's talk about how the system affects financial statements. All right, so again, we're doing just job costing today. So we have cash, we have raw material, work in process, finished goods, supplies, which is your indirect materials, and your regular equipment. So your work in process, so they're currently working on boats 3, 4, and 5. And that's their current work in process for those 3 boats. They have finished boats 1 and 2. So that's your finished goods inventory. And then if you had already sold some, then you would see that it would go back into retained earnings in the form of net income for that. So it's your whatever you received in revenue minus your expenses, and then your cash will probably go up as well, or your accounts receivable. So this just talks about sort of how things flow through the system, very similar to what we did the last chapter, whatever that, I think it was the last chapter that we did. So we've seen this before. You pay $1,400 or $14,000 for raw materials. You use those raw materials, it goes to work in process. We paid cash for supplies, indirect materials. We paid cash to employees. Remember, it's a work in process. Very strange that it's an asset, but it is. And then you went ahead and applied your overhead. And then it went from work in process to finished goods. And then we paid cash for selling and administrative expenses. And remember, that has nothing to do with the production process. So it's not going to go into work in process. It's going to go directly as an expense. And then we paid cash to production employees. So again, work in process. And applied overhead again for boat 5 this time. And then we paid cash for indirect product costs. So again, this is going to go on the other side of your manufacturing overhead. So let's look at, instead of you watching this PowerPoint, let's look at how this works. So I guess the first thing I wanted to talk about was to make sure you understood the difference between a cost and a job, or excuse me, a process costing system and a job costing system. So coffee tables, they typically said would be process as long as they're all kind of the same. There are no custom coffee tables. Plastic storage containers, again, I would consider that process as long as they're not individualized. TV sets the same. A ship, that's probably job. So those are big items. Each ship is probably going to be a little bit different. So I would say that that's a job. Potato chips, process. House would be job. A custom made suit, that's job. If it says custom made, chances are it's going to be a job costing. Van with custom features, job. CPA review course, it depends. If they're all kind of the same, I would say it's process. If it's individualized to that person, it might be a job, but typically it's going to be process. Shirts are probably process. Pots and pans are probably process. Apartment building is job. Automobile, if it's not individualized, it's going to be process. A movie, job. Airplane, probably job. And personal computer with special features is probably job. Any questions on that? Anything you guys want to talk about on the difference between process and job? All right. So let's talk about, and 5 and 6 are really good at sort of putting everything that we have done up until now together. So let's look at, oh, I forgot, you guys can't see this, hold on. Somebody needs to be like, can't see what you're talking about. Okay, so hopefully you guys can see exercise 12-5 now. If you can't, let me know. So we are building sailboats. On January 1st, the company had balances in each of the accounts. So then boat 25, obviously this was job costing. Boat 25 was started in February and finished in May. To build the boat, they had incurred labor and materials. And then during the same period, they had $11,160 for manufacturing overhead. The company expects to incur this amount of overhead for the year, and they allocate that based on direct labor cost. The total expected labor cost is $162,000. So what they want you to do, and I'm not concerned with this at this point, they want you to allocate the 3 different costs to each boat. So the first thing I would do is figure out what your allocated overhead is going to be. So your total, or I should say your predetermined overhead rate. So your total cost is $210,600. Your total cost driver, which in this case is the labor, is $162,000. So figure out what your predetermined overhead rate is going to be. And to do that, so if you remember, you're going to take your total overhead cost, 210,600, divided by the cost driver, 162. Make sure you can see that board. Okay, so your predetermined overhead rate is $1.30 per, is it labor dollar or labor hour? I can't remember. Labor dollar. So for every dollar of labor that you spend, you're also incurring $1.30 in overhead. So I would do that first. The next thing I would do is I would add up the cost of your boat. And you have 3 costs that you need to account for. You have direct labor, direct materials, and overhead. So it says that you incurred, get rid of this, cash costs of $8,640 for labor. For materials, and then we need to figure out what our overhead is going to be for this. So again, your overhead is based on the total direct labor cost. So I'm going to take my labor cost, 7,500, and multiply it by my predetermined overhead rate of 1.3. So I'm also allocating 11,232. Okay, is everybody okay with that? Any questions? Okay, so that gives me a total cost of 27. So that's my total cost for job 25. So it they want a 20% profit. So I'm just going to take this cost and multiply it by 1.20, and that's going to give me my sales price, which is $32.46. So then part C is if the boat is not sold by year end, what amount would appear in the work in process inventory and finished goods? So the boat is finished, so there's not going to be anything in work in process. Finished goods, you're just going to have the cost, which we said was $27,372. So that's what's going to be in finished goods. So is the amount of inventory you calculated in requirement C the actual or the estimated cost of the boat? Well, we have applied overhead in this case, so it's an estimate. And then when is it appropriate to use estimated inventory costs on a year-end balance sheet? And the answer to that is you shouldn't unless you don't have the actual cost yet, and then you can use estimated. But if you have the actual cost, you always need to use actual. All right. Any questions? Okay, so let's do this. Let's go to 12.5b, and I'll let you guys work on that one. Again, we're just kind of putting everything that we've done up to now together. So we are making drapes, and it's job costing, it's custom. So we acquired $60,000 in cash, and then we accepted an order 801 and 802. The company paid cash for the following. So it has your materials and it has your direct labor. So then they paid $18,000 for indirect costs. The company estimates its annual manufacturing overhead costs will be $300,000 and expects to use 20,000 direct labor hours in its first year. So, and it's allocating based on direct labor hours. So again, what I would do first is find your predetermined overhead rate. So you know your total overhead cost is $300,000, and you know that you're allocating it on direct labor hours, and your estimated direct labor hours are 20,000. So go ahead and find your predetermined overhead rate at this point, and then we can go ahead and allocate the rest of those costs. Go ahead and do that now. All right. So you should have a predetermined overhead rate of $15 per direct labor hour. I just took 300,000, the total overhead cost, divided by 20,000, the total direct labor hours, $15 an hour. All right. Now, again, I'm not too worried about this at this point. So let's figure out what their ending inventory is. So they completed job 801 and sold it. Job 802 was still in process. So 801 is no longer in our inventory. So let's go ahead and figure out what the cost of 802 is. So you have, what I would do is similar to what we did here. It gives you your direct labor, it gives you your direct materials. Now you just need to figure out what the overhead is based on your predetermined overhead rate that you just calculated. So go ahead and try that for just job 802. 801 is gone, we don't have to worry about that. Can you let him out, Abby? Yeah, I know. What are you gonna do? All right, so job 802, direct materials were 10,000, right? Direct labor was 8,500. And then overhead, we said was $15 per hour. And we had how many hours? 340. So our overhead in this case is 5,100. So total cost for job 802, 23,600. Any questions on that one? Everybody okay with that? Did everybody get 23,600 hopefully? Okay, cool. All right, let's go back for a minute. And let's talk about 12.6. So again, we're still doing job costing. So this time we're making furniture, and we have 3 different jobs that we're making furniture for. So the company started with this amount of cash, and then we had the direct labor and direct materials. They have already calculated your predetermined overhead rate, so you don't need to calculate that. And then they tell you what the actual was. So let's see how this all goes down. So we already delivered jobs 1 and 2. Job 3 was incomplete. So the company sold job 1 for X amount, job 2 for X amount, and then they also paid $2,000 in cash for selling and admin expenses. So again, I'm not super worried about this part right here. But what they want you to do is figure out your over or under applied cost of goods sold total. So you're going to need to do pretty much the entire problem in order to figure out what you have done that's over or under. So what I would do is you have jobs 1, 2, and 3. I would just add up the cost for each of those. So they give you the direct labor and direct materials. Go ahead and allocate the overhead at 50 cents per direct labor dollar. So for example, if your direct labor for job 1 is 3,000, your overhead is going to be 1,500. So go ahead and add up all the costs for each of these jobs, and then we'll talk about what overhead is. I'll give you a minute to do that. With you. Go get a treat and take him to your bedroom. She said it, I didn't. Go get it. All right, is everybody okay with the costs for the job? So job 1 is 6,500, job 2, 2,800, job 3, 7,950. Are there any questions on how we got there? All right. So the second part of this, we wanted to figure out what we did with overhead. Okay, so let me erase this. So what I would do is make a T-chart for manufacturing overhead. Remember, when you apply it, it goes on this side. When you have actual, it goes on this side. So between the 3 jobs, we applied 1,500 in overhead, we applied 700 in overhead, and we applied 2,050 in overhead. Well, then somewhere in here, right here, in fact, it says that we our actual overhead expenses were 4,200. So actual, we paid actually 4,200 in overhead. So when I add these all together, that's what, 27, 37, 4,250 over here and 4,200 over here. So I hope you guys can see this. I'm not exactly sure if you can. Okay. So what this means is we applied $50 more than we actually had, which is good. We were $50, we had $50 less in expense than we thought we would. So what we need to do in this case is close this out and lower our cost of goods sold. So I'd have to put 50 over here just to make it even and make it 0. And then I could put cost of goods sold lower by $50. Okay. So my selling and admin expenses, I'm not worried about with overhead. So again, we put 50 over, this is part B, 50 over here to close out our manufacturing overhead, make it 0. And then we would credit or lower our cost of goods sold by $50. And then the last part wants us to figure out what our gross margin for the year was. So I'm going to erase this, but what you want to do is you want to figure out, it says what they sold it for. So you're going to take what you sold it for and then just subtract your cost of goods sold. The caveat being that you have that $50 of overhead that you lowered your cost of goods sold by. So for gross margin, take your revenue and you subtract your cost of goods sold. And that's going to give you your gross margin. Okay. So I think revenue, it said, was 92.50 and 49.30. I don't know what that equals together. So we have 92.50 plus 49.30. So revenue is 14,180. And then our cost of goods sold, we said was 6,500 for one and 2,800 for the other. So cost of goods sold was 9,300. However, we got to lower our cost of goods sold by $50 when we zeroed out our manufacturing overhead account. So our actual cost of goods sold is, which means that our gross margin is 49.30. Okay. How does everybody feel about that one? Any questions on where any of these numbers came from? I'm assuming that everybody then is like fantastic. You can follow along with this 100%. All right. So let's try B. So again, this is similar. So we, the company issued, okay, so this just gives us a beginning cash. It tells us what our actual overhead cost was, our predetermined based on direct labor hours. So here are the hours for each one. And then we paid cash, doesn't really matter in this situation. But they want to figure out, in this case, you don't have to do it this way. You could do it whatever way you want, but the cost of each job. And then we're going to go ahead and close out our cost of goods sold. And then we are going to figure out what our gross margin was. So the first thing I would do is you have jobs, I'll just call them 1, 2, and 3. You have direct labor. What comes first? I'll put direct materials first since they showed that first. You have direct materials, you have direct labor, and then you have your overhead. Which gives you your total cost. So you know what your direct materials and direct labor are for each one of these jobs. And then you're going to go ahead and allocate your overhead. So let's see, your overhead is $16 per direct labor hour. So for job 301, for example, you do $16 times 450 hours, and that's going to give you your overhead in that case. So go ahead and fill in the cost for each job. And then we'll talk about what happens with your manufacturing overhead. So I'll give you a few minutes to do that. If you have any questions, let me know. Does anybody need more time? Did everybody actually do it? Okay. So 301 was 26,100 to 34,960 and 3,36,20. Everybody good with that? You're like, yeah, sure. Sounds good to me. Okay. So part 2 is trying to figure out what your overhead is. So manufacturing overhead. And again, remember that as you apply it, it goes over here. Actual goes over there. So 7,200, 5,760, and 10,880. And then they said they gave us the actual overhead, which was 24,080. So at the end of the year, they got all their bills in. They realized we actually paid an overhead $24,080. So this is 23,40, and this is 24,80, and they were actually ridiculously close. But they had more, this time they had more overhead expense than they thought in the amount of $240. So you're gonna have to increase your cost of goods sold by $240 this time. So again, the difference between these two is $240. You actually had more expense than you thought. So this time you're going to increase your cost of goods sold. So I'm gonna have to put 240 over here just to zero out the account. The other side goes ahead and increases cost of goods sold by 240. Any questions on that? Do you want me to do the where you figure out your gross margin, or are you guys good with that?
Can you do it?
I can. I would love to do it. Okay. So the first thing I want to do, so remember your gross is going to be your revenue minus your cost of goods sold. And remember, you have the caveat of what are you going to do with the extra cost of goods sold that you had to close out with. And so, excuse me, sorry, that's going to give you your gross margin. Okay. So we sold, I guess, just jobs 1 and 2, and we sold them for $32,000 and $45,000. So 45, 77,000, I think. So 77,000. And then we're just gonna add the 2 costs of goods sold of jobs 1 and 2, and that was 26,100 and 34,960. And I can't do that one in my head right now. Plus 34,960. So that gives us $61,060. However, we had to increase our cost of goods sold by 240 because we underestimated how much it was going to be. So I'm going to add to that 240. So our actual cost of goods sold is 61,300. So the difference between those is 15,700, which is our gross margin. Any questions? Is everybody feeling okay about this? Okay, so let's see if there's anything else I wanted to talk about in the PowerPoint. So then again, this just talks about how they kind of flow through the accounting system. Recognizing cost of goods sold, we just did, and then closing the account, which we just did. And this gives us the balance for each of them. All right, so then we go into a process costing system, which we'll talk about on Thursday. It's a little bit more complicated than this system is. So just keep that in mind. You may want to look at your material before you hop on Thursday, so you kind of get an idea. We're going to have to figure out equivalent units and that sort of stuff. So, so again, 2 things to remember. 1, we're not doing chapter 13, but if you do the homework, I will give you extra credit. 2, the final is optional. So 2 sort of big changes there. So if you have any other questions or any comments, let me know. I'm trying to post the lectures on Canvas, but they do keep giving me a lot of errors, so it just is taking time. I'm getting some of them up there. So any other questions or comments?
So do we have one more test before the final exam or no?
You do. So you're going to have one more exam that covers chapters 10, 11, and 12. That's going to open up after class on Thursday, and it'll be open through Friday night.
Okay, that's what I thought. Thank you.
Anything else?
If we choose to do the homework, when is that due?
So that is going to be due May 1st. Let me back up. That is actually going to be due April 30th because your final is May 1st. So I want you to finish everything before that. So April 30th is when that homework is going to be due.
Thanks.
Anything else? Okay. So that's all I have for today. We will continue this fantastic, very last chapter that we have to do. And so I am going to log off. If you have any questions or comments, send me an email. Otherwise, I will see you guys on Thursday. Have a good one.